warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Tuesday, the 16th of December. We hope you've had a great day so far.
All right, let's begin with your news now. The Central Bank of Nigeria has revoked the operational licenses of ASO Savings and Loans PLC and Union Home Savings and Loans PLC as part of efforts to reposition the mortgage subsector and enforce compliance with relevant laws and regulations. The CBN said the institutions violated sections of the Banking and Other Financial Institutions Act 2020 and the revised guidelines
that redefine what's achievable. This is about creating a continent where sustainability is not a buzzword, but a lived reality where mobility is smart, clean, and inclusive. At MTN, our role is clear. It is to enable the digital backbone that powers innovation through connectivity, IoT solutions, and integrated platforms. We make it possible for sustainable mobility to thrive. Imagine electric buses connected to real-time data systems, optimizing routes, monitoring performance, and ensuring safety. That's the kind of future we are building together with our partners. Specifically, MTN Uganda has played a critical role in this initiative, providing the connectivity and the digital infrastructure that supports real-time monitoring and operation.
Meanwhile, in Namibia, banks are set to overhaul lending practices with the introduction of a new interest rate policy. The change will affect how loans for homes, cars, properties, and other credits are priced as the country moves away from the Windhoek Interbank Agreed Rate, currently the benchmark for the Namibian financial market. Nicholas Mukasa, Director of Financial Markets at the Bank of Namibia, said the central bank is still discussing the new rates and the best implementation strategy with the industry, with an official announcement expected next year. In Morocco, Masa Maroc has signed a strategic agreement to acquire a 45% stake in Spanish port operator Boluda Maritime Terminals, part of a Boluda Corporación Marítima, for 80 million euros, marking a major expansion into European port operations. The transaction will be carried out through Masa Maroc International Logistics, the company's wholly owned subsidiary for international development, which will acquire 45% of BMT's capital and voting rights. The deal was approved by Masa Maroc's board on 19 November and remains subject to regulatory approval. At the 2025 African Securities Exchanges Association Conference, a session on regulations in capital markets, the Chief Executive Officer of the Zimbabwe Stock Exchange spoke on the balance between regulatory oversight, market growth, and innovation, highlighting how policymakers can support liquidity, transparency, and investor confidence across African markets. Let's listen.
So what we have done as Zimbabwe is that we have split our capital markets into two. So we have a local currency exchange and capital market under the Zimbabwe Stock Exchange, and we have a US dollar exchange under the Victoria Falls Stock Exchange. So we have two exchanges mainly in Zimbabwe. And what we have seen is, as we are working as a country to stabilizing our local currency, the hard currency exchange is done quite well. It is done well in terms of raising money. It is especially in the mining sector, which has helped in growth of exports of minerals as well as jobs. It is done well in terms of valuations. So what we are seeing now, Zimbabwean companies tended to lag quite a lot in terms of their regional peers. And what we are seeing now is that now it's at par. And also what is done as well is able to attract foreign investment as well as attract regional companies to come and list as well. So we're quite happy with what we've done in that case. And what we have seen is that as in capital markets, you need to deliberately see the challenges that your economy is facing and then develop rules and regulations around that. There is no need, or there's not good to just look at what other people are doing. You have to try to solve your local problems. And that's what we have done very well in terms of the Victoria Falls Stock Exchange. As far as the Zimbabwe Stock Exchange is concerned, our thrust now is to target SMEs. As most countries in Africa, what we are seeing is that the smaller part of the economy is where there's growth. We think about 70% of the economy in Zimbabwe at the moment is either SMEs or in the informal sector. So what we want to do is that put a lot of effort in terms of growing that sector and bringing it to the market. And we're looking at twofold. The first part is we want people to be able to come to our platform to just raise money and not necessarily list. Then the second part, they can come to our platform and also list. And that's been quite popular. I think at the moment we announced that initiative about 3 or 4 months ago, and we have got 10 or 15 companies that want to come onto the platform.
In Nigeria, a 5-member panel of the Supreme Court, led by Justice Lawal Garba, has ruled in favor of Fidelity Bank PLC in its appeal against Sagecom Concepts Limited, bringing finality to a legal dispute that has lasted over 2 decades. The court ordered that the judgment debt be paid in Naira at an annual interest rate of 19.5% instead of the daily compounded rate previously awarded. The applicable exchange rate will be that of the High Court judgment date, consistent with the Supreme Court's decision in Anibaba versus Dana Airlines. The dispute stems from a 2002 credit facility involving the former FSB International Bank, which merged with Fidelity Bank in 2005, and subsequent legal proceedings related to collateral. The ruling fixes the judgment debt at about 30 billion naira, confirming a lower liability than the 225 billion naira previously speculated. In other news, Egypt plans to drill 480 exploratory wells over the next 5 years, with total investment estimated at $5.7 billion as part of efforts to reverse a decline in natural gas production, Petroleum Minister Karim Badawi said on Monday. Speaking at the 9th Al-Aram Energy Conference, Badawi said the petroleum sector is moving from decline to stability, targeting a gradual increase in gas output for the first time in 4 years. The government also aims to achieve crude oil self-sufficiency within 5 years through investment incentives and new production technologies. Finally, on News Now, Uganda Airlines has addressed recent flight delays, citing disruptions caused by a grounded Airbus aircraft. CEO Jennifer Bamuturaki said teams are working to stabilize operations and restore normal schedules across the network. Here are excerpts.
We have had quite a bit of disruptions, cancellations and delays, and really these have been caused by the fact that we are 2 aircraft less. We have 7 aircraft, including a wet lease, but we have 1 Airbus and 1 Sierra J that are on ground. That means that they have a technical. So this sum has caused a lot of disruption, especially in this very, very high season of travel. We have disrupted a lot of our guests because we have to either combine flights or delay them extensively. That sum also coupled with notices to airmen, what we call NOTAMs. So you find that you extend a flight and then you are affected by a closure in that airport and restricted time of travel or landing, rather, because of the notice that they have issued. So it's not a very good time for us and also for our guests, extremely uncomfortable. We have an aircraft that is grounded in Lagos. So we are working around the clock with the manufacturer, equipment manufacturer, to be able to source the part and return the aircraft online. This morning there was a bit of confusion to the public that we had an aircraft stuck in London as well, but that isn't true, Sam. As we speak, it should be landing in about an hour from London. Of course, at a different time schedule, because we are operating with one Airbus, and that already has a knock-on effect on the other routes that are operated by the Airbus.
I am Melissa Enoch, and that's it on News Now this Tuesday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market update. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's market review. Hello there, Grace.
Thank you, Melissa. Let's take a look at how the markets traded today, starting off with the equities. The NGX All-Share Index inched up by 0.01% to 149,459.11, while the BRM slipped 0.13% to 346.69. The Nairobi Securities Exchange gained 0.71% to 179.29. In South Africa, the Johannesburg Stock Exchange fell 0.39%, and in North Africa, the EJX 30 declined 0.72%, while the Morocco's MASI was also flat, up 0.04%. Let's do a quick round on some of the Pan-African currencies. The rand strengthened 0.64% to 16.78 against the US dollar. The Egyptian pound edged up 0.01%, while the CFA franc is 0.17% to 557.57. The Kenyan shilling slipped 0.04%. The Moroccan dirham weakened 0.27% to 9.15, while the naira gained 0.21% to 1,453 naira 48 kobo. Let's switch into the commodities data deck, beginning with energy prices. Brent crude fell 1.47% to $59.67, and US WTI also fell 1.62% to $55.90. Natural gas declined 1.55% to $3.95, while Arabia gasoline slipped 1.29% to $1.70 as at 13:08 GMT. Now, finally, two soft prices. Cocoa was almost flat, down 0.07% to $5,872, while coffee declined 1.55% to $354.70. Cotton fell 0.19%. Palm oil inched up 0.17% to $966.10, and sugar rose 0.27% to $14.99 as at 13:11 GMT. And that's our Money Moves Markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up today. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.